Remember, the sales ledger control account shows how much our credit customers owe us. So, any transaction that increases the amount that the credit customers owe us will be entered on the debit side of the sales ledger control account. Any transaction that reduces the amount that they owe us will be entered on the credit side of the sales ledger control account. Now, let's say at the start of the year, our credit customers owed $40,000. Then that would be your opening balance, which should be entered on the debit side of the control account. We'll write it as balance brought down. And look at the next one. It says checks from credit customers. Now, when you receive checks from credit customers, the amount that they owe you is going to reduce. Asset reduces, debt reduces. You enter that on the credit side of the sales ledger control account. So we can say bank. Then dishonored check is where a check that was received from a customer has now been returned by the bank because there weren't sufficient funds available in the account of the customer. So when there's a dishonored check, the amount that the customers owe us is going to increase. Therefore, we enter that on the debit side of the sales ledger control account. Either we can say dishonored check or we can even say bank. Then next, cash sales. Cash sales do not have any impact on the amounts that the customers owe you because it's a cash sale. You get the money then and there. Credit sales will increase the amount that they owe you. So you enter that on the debit side of the control account. Then credit notes issued to customers. A credit note is issued when customers return goods. So we are talking about sales returns here. When there are sales returns, the amount that the customers owe you is going to reduce. So we enter that on the credit side as sales returns. Then discount allowed. When we give a discount, the amount that the customers owe you is going to reduce. Therefore, we enter that on the credit side. Then irrecoverable debt. It's where we write off a certain amount owed by the customer because we know with certainty that we are not going to be able to recover that amount from the customer. So when we write off irrecoverable debt, the amount that the customer owe you is going to reduce. Therefore, we enter that also on the credit side. And then the next thing you do is you balance the account and bring down the balance as balance carried down, brought down.